Have you ever noticed that by the time everybody wants to buy something, the biggest money has often already been made? The headlines make it feel like you're getting in early. But the market reality is you're usually getting in after the excitement has already been priced in. And that's where investors often pay what I call the hype tax. Let's take a look at this chart. By now, you've probably heard about the SpaceX IPO becoming the largest one in history. A lot of investors are asking the same question: should I buy it? Before we answer that, look at what's happened to some of the largest IPOs ever. This chart shows the one-year return after the stock's first day of public trading. Rivian fell more than 67%. General Motors dropped nearly 34%. Facebook fell over 31%. Alibaba declined almost 30%. Even Visa, one of the most successful companies in the world, was still down nearly 7% 1 year after its IPO. Only Saudi Aramco managed a positive return. That's a pretty remarkable track record. Here's why. The investors who get the best deal aren't usually individual investors. They're the institutions, the banks, the hedge funds, the private equity firms. They buy in shares before the stock becomes available to the public. By the time you see the buy button on your screen, much of the excitement has already been reflected into the price. That doesn't mean that great companies can't become great investments. It simply means great companies aren't always great buys at any price. This is exactly why we take a risk-first approach. We don't build portfolios around headlines, we don't chase excitement, and we don't assume the crowd is right simply because it's loud. Instead, we focus on valuation, diversification, and long-term discipline. Because successful investing isn't about buying what's popular, it's about buying what's appropriate for your goals and your risk tolerance. The stock market is a device for transferring money from the impatient to the impatient. Warren Buffett said that. A couple of things to remember. First, a great company and a great investment are not always the same thing. Second, excitement can move prices in the short term, but fundamentals ultimately drive the long-term results. And third, the best opportunities often appear when nobody is talking about them, not when everybody is. This is Aaron Howard with your weekly market update. Thanks for watching, and we'll see you again next week.